Why are global commodity prices dropping? Welcome back to another deep dive into the global economy. Today we are tackling a question that is making headlines worldwide. Why are commodity prices falling and what does it mean for all of us? Commodities are commonly utilized to diversify portfolio allocation due to their strong sensitivity to inflation. Their prices tend to rise significantly during periods of increasing inflation and decline when inflation subsides. But at the moment, from oil to copper to agricultural goods, everything seems to be in a downward spiral. The World Bank's Commodity Price Index is projected to decline by 4% in 2024, following a significant drop of nearly 24% in 2023, the sharpest decrease since the pandemic. As seen in the chart, most of the commodity prices are in a downward spiral this year. Let us break it down.
It's gonna be so much fun!
Slowing global demand. When major economies like the US, EU and China slow down, demand for raw materials drops. This means less steel and copper are needed for construction, fewer oil barrels are consumed, and agricultural products face reduced buyers. A slowing construction sector and lower manufacturing activity are key contributors. Think of it as a restaurant preparing food for 100 customers but only 50 show up. All that extra food becomes surplus, reducing its value. Oversupply. Producers often ramp up production during high demand periods. But when demand slows, they are left with excess inventory. This oversupply leads to falling prices as sellers compete to clear their stock. It is like over-ordering pizza for a party. Once everyone is full, the leftovers become less valuable. Economic uncertainty and recession fears. Geopolitical tensions, inflation and rising interest rates make businesses and consumers cautious. Lower consumption and investment mean less demand for raw materials. This cautious behavior slows the economy, further impacting commodity markets globally. Technological advances and efficiency. As renewable energy adoption grows and alternative materials become mainstream, reliance on traditional commodities like oil and coal decreases. Solar panels, electric vehicles, and wind turbines are reshaping energy consumption patterns. It is like switching to an energy-efficient appliance and seeing your electricity bill drop. That reduction in demand impacts traditional energy producers. Currency fluctuations. A stronger US dollar makes commodities more expensive for other countries. Since commodities are priced in dollars, a rising dollar reduces affordability globally, leading to lower demand. Imagine buying a smartphone but the price suddenly doubles due to exchange rates. You might hold off or skip it entirely. That is how currency fluctuations hit global commodity markets. China's economic slowdown. China, being the largest consumer of many commodities, plays a critical role. If its economy slows due to issues like a property market crisis or reduced exports, it pulls down global demand significantly. Think of China as the biggest shopper at a market. If they stop buying, prices crash because there is no one left to clear the inventory. Now let's understand why falling commodity prices are a double-edged sword. At first glance, falling commodity prices might seem like a win, especially for consumers and importing nations. Cheaper oil, for example, reduces transportation and energy costs, leading to potentially lower prices for goods and services. However, beneath this apparent advantage lies a more complex and concerning picture. Signals of economic slowdown. Commodity prices often reflect global economic health. When prices drop, it typically indicates a reduction in demand from major economies like the US, EU, and China. Lower demand suggests slowing industrial activity, reduced construction, and weakening consumer spending, key indicators of an economic slowdown. For instance, if steel and copper prices fall, it may signal reduced construction and manufacturing, a sign that economy is slowing down.
That's fast.
If you enjoyed this breakdown and want to stay informed about how global trends impact your life, make sure to like, subscribe and drop your thoughts in the comments. Let us navigate the world of economics together.